Good morning. This is Business Live with me, Ian King. We begin with some breaking news this morning, courtesy of our city editor, Mark Kleinman, who joins me now. Mark, what have you got?
Yeah, some interesting news from the High Street this morning, Ian, which is that Next is on the brink of acquiring Fatface, the family-focused fashion retailer, in a deal that I understand is worth more than £100 million. Now, this is interesting for a couple of reasons. Firstly, because this is the latest chapter in an ongoing shopping spree for Next chief executive, Lord Wolfson. In recent years, Next has snapped up a number of brands, including the online furniture retailer Made.com, the maternity wear retailer Jojo Maman Bébé, and a number of other brands as well, including Jules, the fashion and lifestyle chain. Now, some of those deals have taken place when those retailers have got into financial difficulty, have fallen into administration. That is not the case with Fatface. As I understand it, Ian, the deal is worth a significant sum of money, and actually Fatface and its performance have been turned around in the last 3 years. It was taken over by its lenders through a debt-for-equity swap when the pandemic hit in 2020, but actually it's enjoyed strong sales growth in recent times, and that's brought it to the attention of Next. And as I understand it, Ian, this deal could be announced as soon as this week. The latest, as I say, episode in an ongoing shopping spree by Next, which has really usurped Mike Ashley's Frasers Group now as the most prolific buyer of other smaller retail brands in Britain.
Great stuff. Thanks, Mark. Well, to the Israel-Hamas war now. And this morning, the US Treasury Secretary Janet Yellen said there was no sign yet of the attack on Israel causing a major impact on the global economy. But the Hamas attacks and the Israeli response will have an economic impact on Israel itself, especially its tech sector, as well as Gaza. Well, joining me now live from Israel is the Middle East economist Doron Peskin. Doron, welcome to you. How do you assess Israel's financial ability to engage in a drawn-out conflict with Hamas?
No, I think Israel can handle this campaign, but the question if Israel implements what it says now to disengage from Gaza economically, this could create a big problem, a regional problem, because there are over 2 million people in Gaza, and the economy of Gaza is based on Israel in terms of goods, water, electricity. So someone will have to take care of this.
It's been very interesting, the approach of Israel to Gaza in recent years. I mean, they'd eased trade restrictions, they'd issued thousands of work permits allowing Gazans to enter Israel, and they'd allowed Qatar to invest millions of dollars in Gaza. Has that backfired on Israel?
Yeah, I will tell you, Ian, Israel wanted to believe, and also other actors in the region wanted to believe that Hamas, as ruler of Gaza, has some responsibility or priority to take care to the welfare of 2 million Gazans. And I think all the measures Israel took in recent years was because of this. But as I wrote recently, it seems that the deception of Hamas was not just on the military front, it was also in the economic field. And there are no other words to say that Hamas deceived Israel, and I think also Qatar, making them to believe that they really are interested in the reconstruction of Gaza and the growth and welfare for the Gazans.
Yes, the flow of dollars from Qatar to Gaza has dried up in recent months. Why is that?
Yes, I think also Qatar and Hamas used this to pressure more on Israel and the other Arab countries as part of its preparation for the war. Hamas in recent months made some gestures for the Assad regime in Syria, and Qatar, as the only Arab state that boycotting Syria because of the war crimes of this Assad regime, was not happy from this and decided to cut the financial support from $10 million to $3 million. As we can understand now, this cut affected mostly the employees in Gaza, but not the military wing of Hamas.
Doron, what about Israeli defence spending? Clearly, in the last couple of decades, the military has concentrated on advanced air and defence systems, technology. Is it going to have to pivot back now to conventional infantry and artillery?
Yeah, you know, we are now in the middle of the crisis, but I hear some voices that immediately Israel will have to change its budget for next year. And of course, the focus of the military budget will have to change. There is also more criticism that the Israeli army in recent years became more tech. And it seems that in this region, we have to also be prepared for face-to-face clashes. And I think this war will change the military conception of Israel like it happened after the 73 war.
Doron, have to leave it there. Appreciate you joining me today. Thank you.
Thank you, Ian.
Some other business news stories for you now. And shares of Travis Perkins fell by as much as 13% this morning after the UK's largest supplier of building materials to the building and construction industry warned that profits for the year would be lower than expected. The company, which trades from more than 500 branches and which also owns the Toolstation brand, blamed a pronounced slowdown in new build housing and domestic renovation, maintenance and improvement activity. Travis Perkins now expects operating profits for the year to come in at between £175 to £195 million, down from the £240 million it was predicting 4 months ago. The Competition and Markets Authority said this morning it's seeking views on the proposed merger between the mobile operators Vodafone UK and 3UK. The deal, should it go ahead, would see the combined business leapfrog EE to become the UK's biggest mobile operator. But it's come under fire from the unions, which are concerned about the impact on jobs, while some MPs have raised concerns at 3UK's Hong Kong-based ownership and possible links to China. The drugs giant GSK said this morning it has settled 4 cases in the Californian courts concerning allegations that Zantac, its former blockbuster heartburn drug, causes cancer. It comes 4 months after GSK settled another Californian case concerning Zantac, which is one of the first medicines in the world to achieve more than $1 billion worth of annual sales. GSK said the settlements reflected its desire to avoid the distraction related to its protracted litigation. It added, GSK does not admit any liability in the settlements and will continue to vigorously defend itself based on the facts and science in all other Zantac cases. GSK shares currently ahead by just over 1%. And the staffing and recruitment firm Page Group has become the latest player in the sector to warn of tough trading. The company said that in the 3 months to the end of September, net fees were down 7.9% on the same period last year, with net fees in the United Kingdom down by nearly 19%. The news comes a day after rival Robert Walters also reported a drop in net fees during the quarter. Shares of Page Group have fallen by 3% this morning. Now, as we've been reporting regularly on this programme, the rapid advance of artificial intelligence is having a huge impact on the business world. A new report that suggests, despite some of the negative headlines, AI is actually being embraced by young workers in particular. Well, joining me now is Lucille Cornet. She's partner at 8 Roads Ventures Europe, which carried out the research along with Hi Bob, the HR tech specialist. She joins me now live from Paris. Lucille, welcome to you. Before we talk about your research, 8 Roads Ventures has 10 investments, I think, in tech companies in Israel, including Hi Bob. What have you been hearing from them this week?
Yeah, that's right, Ian. We've been long-term investors in Israel and have more than 10 portfolio companies in Tel Aviv. So, of course, very distressing to hear the news and see the images over the last couple of days. And our thoughts are very much with the families of everyone affected.
Obviously, Israel's tech sector is an absolute powerhouse. For those who aren't familiar with it, just put into some numbers how big and important it is.
Yeah, Israel has been, called the startup nation for a good reason. It's a very vibrant tech ecosystem for many years, very vibrant entrepreneurial spirit, and they've been living on and off with conflict over the last decades. So obviously very concerning to see the escalation. But on the longer run, we continue to be very optimistic about Israel as a tech powerhouse.
That's very good to hear. Now, onto your research. Were you surprised to find that young people are as enthusiastic about AI as they are?
Yes, so we run this research every year, surveying 2,000 young workers going into the tech ecosystem. And it's been really interesting this year. We've been asking them about their pulse about AI and the effect it has to their day-to-day jobs. And it was really interesting to see 4 out of 5 young workers embracing AI in their position, feeling that it would make them more productive, more creative, as opposed to being replaced by it.
What was very interesting, though, was that this time last year, you picked up on quite a lot of job uncertainty, a lot of unhappiness among young tech workers. That seems to have gone away.
That's right. One interesting point, the job security has more than doubled compared to last year, which is encouraging and makes us think that most of the tech redundancies are probably behind us, and encouraging to see in Europe.
What about the funding environment right now, Lucille?
The funding remains muted. We can't hide from that fact. But again, I think we're very much hoping to see the activity coming back, especially in 2024.
And do you think that has any bearing on the ability of tech companies to retain young talent? It sounds as though people are quite happy to stay where they are. There's less mobility within the sector right now. Is that the case?
I think that's fair. And look, the tech ecosystem continues to require more and more talent. I think, as a reminder, tech is 8 to 9% of the GDP in Europe, and continues to be a growing sector. So it's really vital for tech companies to continue attracting and retaining that young talent, but encouraging to see that it remains an attractive career choice for young workers. Maybe another thing to note is when we ask about young workers, about their ideal role, a lot of them talked about purpose. So beyond salary, compensation, promotions, they also really care about joining a broader mission.
Lucille, we have to leave it there. It's good to have you on the programme again this morning. Thank you.
Thanks for having me.
Well, last night's gains on Wall Street as bond yields continued to fall were followed by gains for equities across the region in the Asia-Pacific area overnight. Nikkei in Tokyo finished at a 2-week high. Well, in Europe, stocks are similarly trading largely, well, it's a bit mixed actually now. I mean, they were all trading to the upside earlier on. We've seen a bit of slippage there in the CAC 40 in France in particular, and that's probably because the big talking point today is LVMH, the luxury goods giant. It's France's biggest company by some distance, and the shares are currently off 6.5% in Paris after reporting a slowdown in quarterly sales growth. Well, here in London, the FTSE 100 is in positive territory, albeit only up about 1/6%, led by some of the utility stocks. In percentage terms, the leading blue chip gainer is Imperial Brands. It's up by just over 1.5% after receiving a push from one of the brokers this morning. To the downside, well, I mentioned LVMH's woes a moment ago. Burberry is off nearly 3% in sympathy with that. Outside the FTSE 100, well, the bus and train operator First Group is ahead by nearly 4% right now after raising its full-year profit outlook, while the outsourcing group Mighty is ahead by nearly 5% for similar reasons. On the foreign exchange markets, well, it's all pretty quiet today ahead of minutes later on today from the latest Federal Reserve meeting. Sterling more or less unchanged against the dollar and the euro, and likewise all the currency pairs really not very moving much at all there right now. The oil price is similarly becalmed. It's traded in a very narrow range for the last 48 hours. Barrel of Brent crude currently changing hands at $87.31 a barrel. That's down a little under 0.2% on the session. Well, joining me this morning is Victoria Scholar, Head of Investment at Interactive Investor. Victoria, welcome to you. I mean, LVMH, I mean, it recently became the first European stock to hit $1 trillion in its valuation. Fallen back a bit since then.
Yeah, absolutely. We saw that third quarter revenue came in at 9%, which sounds pretty strong. But actually, if we put it into the recent context, it's a sharp drop from the previous period where it logged growth of 17%. And the same goes for its largest division, fashion and leather goods, which actually mildly missed analysts' expectations. And then wine and spirits actually struggled with a drop in revenue. And there's a lot of focus when it comes to luxury stocks on the performance in Asia, a critical region in terms of this spend. And we saw sales growth there slow significantly from 34% in the previous quarter down to 11% this quarter. So clearly luxury has been a pretty strong sector. We know that high disposable income consumers are relatively shielded from cost of living pressures, but LVMH is the first to report in the sector, and it looks as though it could pave the way for further weakness in terms of results this period.
Yeah, it's interesting to see all the luxury goods stocks falling across Europe today. I mean, another very, very big European company, Novo Nordisk, Denmark's biggest business, grabbing your attention today.
Yeah, that's right. It had some early success in a trial of its Ozempic drug, which has already been a blockbuster success in terms of its ability to tackle weight loss. But now it looks as though it could have some success in terms of kidney failure for diabetic patients. And that means that Novo Nordisk has been able to end this trial much earlier than expected, which is why the stock is trading sharply higher today, extending the recent rally since August, when we saw a huge jump when we learned about Wegovy's properties in terms of its potential to reduce cardiac events by 20%. But these drugs are absolutely getting so much excitement among investors. It managed to overtake LVMH to become the most valuable company in Europe as a result. And we've also seen other stocks in the sector like Eli Lilly, which is also developing its own similar weight loss drug, stage impressive gains recently. And some of the analysts have some very bullish forecasts for the outlook for the obesity drug market. JP Morgan thinks it could be worth $71 billion in under 10 years, and Morgan Stanley thinking it could be worth $77 billion by 2030.
Very briefly, Victoria, the big event later today is Birkenstock's IPO in New York Stock Exchange.
Yeah, absolutely. Getting prepared for this IPO. It's going to be closely watched. It could be the third largest IPO in the US of this year. It's already outlined its flotation price at $46 a share, which is broadly in line with expectations. But of course, it comes at a volatile period for markets, which is going to be a challenge. But I think it signals that there is a pickup in activity in terms of IPOs. Again, we already had ARM and a couple of others this year. So even though we've had a difficult period in terms of flotations and M&A, there are tentative signs that appetite among investors is picking up.
OK, Victoria, got to leave it there. Good to see you this morning. Thank you. Still to come on Business Live. How resilient is Europe's energy sector as we head towards winter? I'll be hearing from the French energy solutions giant Schneider Electric. Don't go away.
I'm Mark Stone and I'm Sky's correspondent based here in Washington, D.C.
Well, the plan seems to be to head to the police station where the policeman who fired the shots was based.
And everything, his memories is all gone.
I've witnessed the remarkable passion for politics here, but the anger too.
We have to get Trump out of the White House.
I'm playing devil's advocate.
You got your political agenda.
No, it's honestly...
God love you.
And beyond the United States, I report from around the world.
This is a town that is effectively encircled by the Russians.
We take you to the heart of stories that shape our planet.
Yeah, I can hear now quite a few explosions in the distance here in Jerusalem.
What do you think of ISIS?
Everybody here, they know the truth of ISIS.
It's like Emirates. It's like better. Fly Emirates. Fly better. Thank you.
Welcome back. Some breaking news to bring you. In the last few minutes, it has been announced that ExxonMobil is buying the US shale producer Pioneer for $59.5 billion. It's the biggest deal in the oil and gas sector in 2 decades, and it commits Exxon, America's biggest oil and gas company, to fossil fuels for the foreseeable future. More on that throughout the day here on Sky News. Now, last week, the price cap on household energy bills fell, reflecting the easing in wholesale prices this year. But there are still concerns following events in the Middle East that prices could surge this winter. It's why businesses are continuing to stress the need to reduce dependence on fossil fuels and increase electrification. I've been speaking with Gwenaëlle Avis-Huet. She's the Executive Vice President of Europe Operations at Schneider Electric, the French energy solutions giant. I began by asking her how she assesses Europe's energy resilience as we head towards the winter.
You know what happens last year? International Energy Agency was saying that we may be short of 30 billion cubic meters, which is about 7% of the energy demand, and it's still the case. So at the end of the day, energy security is still a big question mark for Europe, and that's why we need to invest into energy transition to happen even faster.
You don't take any comfort from the fact that Europe has invested very heavily in gas storage over the last 12 to 18 months?
You're absolutely right. So gas storage are filled and full, but at the end of the day, it's also the size of the storage and the extent of the winter. Last year was quite mild, but next winter we don't know. And if it's going to spike with huge demand, at that time we will be in trouble. So I really think that we do not compensate for what's happening, and therefore it's really a matter of urgency, and we need to continue focusing on the energy transition.
I mean, billions of euros were spent subsidising fuel bills last winter, £78 billion in this country. I mean, that is not repeatable this year.
Yeah, absolutely right. And that's why we need to think about energy efficiency, how to reduce the bill, and what good question and one good solution is to go for energy efficiency, reducing directly your own consumption. And most of the time when it comes to energy security or energy transition, people think first about renewable energy and how to accelerate that. But on the contrary, the quick win solution is energy efficiency. One maybe good example, building. We see many clients in building, their own building. And at the end of the day, they want to reduce their bill. One quick element is to develop software in a building, and it can reduce the consumption of energy by 30% in a return on investment less than 3 years. So you see immediate solution that can be implemented.
Is this down to governments to drive this, or is it down to the private sector?
I would say both at the same time. On one hand, we need to have objectives and big plans in order to orchestrate the network for energy, for electricity in particular, and that needs to be done by the governments. But then we need also the companies and the private sector to invest into those projects. So I think it both at the same time. One example, renewable energy. Big commitments from the European Union. 43 to 45% of renewable in the energy system by 2030. Big commitment. How to make that happen? We need all the countries to have plans to deploy those renewables. And at the same time, we need companies to invest, the developers, the financiers, etc., etc.
Crucial point you made just now, which is the return on capital invested and the payback on these projects. Is that something that companies are losing sight of, perhaps?
Well, it's more and more difficult today because, people are always looking at a payback, and with the interest rate going up, therefore it questions your profitability of those projects. So that's why we need to come up with also financing solutions. That's why we also partner with some financing institutions, with other partners in order to bring that to the table. For example, again, back to the buildings. I was saying 2 to 3 years of return on investments, but sometimes this is also critical. So that's why we bring this financing piece into the table.
There are some new regulations coming in the EU in the beginning of next year. For those the uninitiated, explain what's happening.
Well, one big important regulation, which is about reporting on carbon, which is called CSRD. So it's carbon reporting. From January 1st, it will be implemented. What this is about, it's about transparency of all the commitments that companies have taken regarding carbon. But not only carbon, it's also social topics. At the end of the day, it's the whole spectrum of environment, social, and governance that will have to be reported externally in a very specific way so that it can make things comparable.
Just a reminder of the breaking news that I brought you a few moments ago. It's just been confirmed that ExxonMobil, which is America's biggest oil and gas producer, is to pay $59.5 billion for Pioneer, which is one of the trailblazers in the US shale industry. Very dominant player in the Permian Basin across West Texas and New Mexico. The deal will give ExxonMobil estimated 15% of the entire basin's output, and it confirms Exxon committed to fossil fuels for many years to come. Big story of that, lots of implications. We'll have more on that throughout the afternoon here in our afternoon programme at 4:30. Hope to see you then. In the meantime, do stay tuned. Coming up after this short break, it's Jane Secker. Thanks for joining me today. Cheerio.